Imagine lending money to Uncle Sam, only to find out he's having trouble paying you back on time. That's exactly what's happening with Treasury Direct right now. The platform that's supposed to be your direct line to investing in government securities is experiencing some serious growing pains. But don't panic just yet. We're going to break down what's happening, why it matters, and what you can do about it. First, let's talk about what Treasury Direct is. It's a website run by the U.S. Department of the Treasury, where you can buy and manage government securities like Treasury bills, notes, and bonds. Think of it as a one-stop shop for lending money to the government. Now here's where things get interesting. Treasury Direct has been around since 2002, but it's suddenly become overwhelmed. Why? Well, thanks to rising interest rates, more people than ever are flocking to Treasury securities. It's like everyone suddenly discovered the best ice cream shop in town, and now there's a line around the block. But why are so many people suddenly interested in Treasury securities? The answer is simple: safety and decent returns. With the stock market setting all-time records and banks offering paltry interest rates, Treasuries have become an intriguing consideration for many investors as recession fears swirl. They're backed by the full faith and credit of the U.S. government, which is about as safe as you can get in the investing world. For example, within the last 2 years, the 10-year Treasury peaked at around 5%, and the 20-year peaked around 5.3%. Think about that. Locking in 5.3% for 20 years with no fear of being called away early, and the credit risk is tied to the creditor that is so reliable that the wealthiest nations invest billions in them. And then let's add to that the fact that 5.3% on the 20-year is actually exempt from state taxes. Simply put, it's gotten popular because smart investors rely on Treasuries, and, wait for it, Treasury Direct is free. Yes, you heard that right. Treasury Direct is a free service. But here's the deal. Treasury Direct just wasn't prepared for this surge in popularity. The computer system is struggling to keep up with the increased demand, leading for delays in payments and frustrating investors. This isn't the first time government bonds have caused a stir. Back in 1917, during World War I, the U.S. government introduced Liberty bonds to help finance the war effort. However, that launch didn't go smoothly. They were initially poorly received as interest rates were below the market, which caused them to immediately trade below their face value. To overcome the problems, the Treasury upped the interest rates and began marketing them as a patriotic duty. And even Charlie Chaplin made short films promoting them. It just goes to show that even Uncle Sam isn't perfect and can sometimes struggle with his IOUs. If you're finding this information more valuable than a high-yield savings account, go ahead and smash that like button. And if you want more bond wisdom that's as solid as Treasury's full faith and credit, subscribe to the channel. It's an investment that always pays dividends. In knowledge, of course. Here's a personal tip I use. Don't put all of your eggs in one basket, even if that basket is Uncle Sam's. While Treasuries are incredibly safe, and the Treasury Direct website is free for use, you can buy U.S. Treasury bills, notes, and bonds during the Treasury auction through your normal brokerage account, like Fidelity or Schwab, and not pay transaction fees there either. Plus, consider spreading your investments across different types of bonds and other asset classes. You'd be surprised how much additional yield you can pick up by buying something super safe like a AAA-rated taxable municipal bond or a corporate bond. Now let's address the elephant in the room. What should you do if you're having trouble getting your money out of Treasury Direct? First, be patient. The Treasury Department is aware of the issues and is working to resolve them. This isn't a solvency problem, it's a technical one. Next, keep records. Make sure you have all your account information and transaction records handy. This will be helpful if you need to follow up on delayed payments. Next, plan ahead. Remember, it's not that you're never going to get your money, it's just that it's taking them much longer than usual to get it to you. Think you might need some of that money sooner rather than later? Request to move some of your positions from Treasury Direct to your brokerage account now, so that it's available just in case you need it unexpectedly. There may be delays, but at least you've planned ahead and know that you're well ahead of where you would be if suddenly you realize, wow, I need that money right now. You've got it coming versus I'm starting the process now. And some of the articles we've read have suggested that your payments could be delayed as much as a year. Last, Stay informed. Keep an eye on official communications from the Treasury Department for updates on the situation. Here's an added bonus tip that you might not already know about. Check out the Treasury Hunt tool to locate matured, unredeemed bonds from the U.S. Treasury. We'll put a link down below, or you can search Google for Treasury Hunt. This is an interesting website, especially for some of you who may have some older savings bonds that you can't locate. In some cases, you might find that you're owed some money through the Treasury Hunt website. Here's an extra bonus tip. Did you know you can use Treasury Direct to set up a bond ladder? It's like creating your own personalized pension plan. You buy bonds with different maturity dates, so you have a steady stream of income coming in at regular intervals. It's a great way to manage risk and ensure consistent cash flow. But what if you're considering investing in Treasury Direct despite these issues? If you're planning to hold your securities for a while, it might still be a good option. The current problems are likely temporary, and the Treasury Department is expected to resolve them eventually. Some estimate it could take them 2 to 3 years. If you've got a bond you're planning on buying and holding till it comes due in 10 years, this probably isn't going to matter much to you. Go ahead and use Treasury Direct. Just be prepared for potential delays if you need cash out unexpectedly. Now let's clear up a few misconceptions. 1. Treasury Direct's issues don't mean the government is running out of money. It's a technical problem, not a financial one. 2. Your money is still safe. These are still among the safest investments in the world. 3. This doesn't mean treasuries are a bad investment. The underlying securities are still solid. It's just the computer platform that's struggling. What's your experience been with Treasury Direct? Have you faced any issues? Have you seen delays? Share your comments below. Your insights could help fellow investors navigate this situation. Remember, while Treasury Direct is facing challenges, Treasury securities remain a cornerstone of many investment portfolios. Stay informed, be patient, and consider your options carefully. If you want to learn more about investing in Treasury bonds, check out our video on Treasury bond investing. It'll give you a solid foundation to build on, especially in these interesting times. Thanks for watching, and remember, in the world of investing, patience is often your best friend. Stay calm, stay informed, and keep building that portfolio. Always consult with a qualified financial professional before making investment decisions. Your situation is unique, and what works for one investor might not work for another. Please see the description for the full disclaimer.